The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market hours, and we are looking at the Dow up 39 at 19,839. S&P is up 520 at 2270. Comp index is up 13 at 5566. Gold is down. Oh, it's actually down 2 at 1213. Silver is unched at about 0.009, up 9 cents at 17.19. Copper's had a really big move up, almost $5 to $2.69. That's very good action. Good market, good foreteller in the market. Looking at the dollar, crude oil first of all is up 54 cents at 53.29. Bonds are down 7.30 seconds at 124.19 seconds, and the dollar is at this particular point, it has disappeared. The dollar is hidden away. I'm going to see what it's doing right here. Dollar is, DXY is down 2 cents at 100.14. Leg D to the downside. It went to a slightly lower low today. Yesterday's low was 99.94. Today's low is 99.92. What I've been saying is, looking at the market in terms of levels that become very important, that whole 99 area that we've just seen today, although slightly above, is going to be so important. A close in the 99s in the dollar would suggest to me that now there's upside, a resistance in the 102 to 102.50 area, looking out a couple of weeks. Yeah, make it 102 to 102.75. But most importantly, the weekly starts to get really negative if there's a close below 99.43, the low of the week of the 9th of December. Try to make it as simple as possible. Now, on a very short-term basis, what we're looking at here is within the context of the markets. Let me show you something. I had to make a little change. I discussed it for my subscribers that there might be a change in my wave count in the Chapman Wave 5. There were two scenarios, and what I said is if there is any price point that goes in the Dow above 19,843.94, the high at 11:30 on the 20th of January, I have to reconfigure this, and this will become leg 3, wave 3, and then we can expect a 4 and then a 5. And 5 will be somewhere in there. And that's really important. Why? Because what it says is there were two scenarios I was looking at on the same chart. Here's a chart of the Dow 120-minute chart with no moving average, convergence, divergence, no stochastic. And here's another one. And what it's got is, let me just change that for 1 second. Format. No, I don't need a color. I just need to put in B. Because now we've got a leg B in the 120-minute chart, and in this 120-minute chart, it is piercing slightly different parameters. It's got a Chapman Wave inside track resistance line. It's right there now. In fact, it's just taking it out. And what that says is that what I mentioned was that I had two different readings, and the reading in the one on the right with the MACD and slow stochastic shows that the MACD is still very good. Stochastic needed to work higher, and if it did, and we took out that level on the left, I had to call that a B, and that would be very important because then it would create some kind of an arch formation, a larger arch formation, number one. Number two is, if it is a B, I'm calling it a gray B because it's underneath the previous serious high of 19,999, then it could still go to a C and a D. And so really just trying to look at this as simply as possible. The VIX index is now at 1140, down 30 cents. Under the 13s, it says that's buying pressure or support. That's really what you have to look at it as. I had a reading that said that within the The reading on Friday, my Chapman Wave trend gauge suggested that there should be weakness in the Dow before a rally was attempted. Yesterday, we saw that weakness and the rally and the weakness, so it succeeded. But yesterday also gave another signal in my Chapman Wave trend gauge, and that said that within 2 sessions, there should be a move of between 9 and 11 points in the S&P futures, which should translate into the cash indexes being higher. Well, look at this. Here is the this is the 10-minute S&P, and it recycled. So this becomes an potential instant restart, and this becomes E/A, F/B. I'm calling it B for now because the MACD is strong, stochastic strong, and C, and that suggests that the 10-minute chart in the S&P cash should go higher. The E-mini, look at this. I've been working very hard on different techniques here. Went to a peak C1, C2, C3, a parallel high around about the 260, just on 266. Then it broke out, and now it's gone to a D. And there it is. And that 2-minute chart says, hey, be a little careful. We could be pulling back, but so far the stochastic at 85% is good, and the MACD is good. So we've had a number of successes in terms of the techniques that we are looking at. And now what we want to look at is get out of this, and we want to start looking at some things that I was asked about. Questions came in fast and furious. The first one was, nice and early this morning, is WTI, crude oil, falling axe daily? And what I said was no. If you look at the crude, let me just go to the crude oil continuous. Oh, I always do that. Don't do that. I always forget. Just tap on the chart. That changed some time ago, and I keep forgetting. So if I'm going to go to crude oil, I don't think so. I know what the idea is, that you've got lower highs like that. Right, I'm going to the actual outer bars themselves. And you can put in a parallel chart. And you'd see that we've gone, you can make it a little higher there. So you've gone to a nice support area. But actually what I'm looking at, and I spoke about this yesterday, was the 200-period exponential moving average at 51.68. That became the support level. But all I'm really looking at, my answer was, I'm really looking at, yes, it could be a bounce, but mostly I'm looking at the arch formation in the monthly chart that says a series of arches, and now you've made quite a nice higher high. So no, I didn't see the pattern as a Chapman Wave falling axe. There are plenty of those around. Look at this here in the E-mini. Let me just show you what it looks like so that we know apples to apples. The falling axe, where did it go? Where did it go? Where did it go? Was that it? Was that it in the monthly? Oh, we already accomplished it. We already done that. So I'll find it in a moment. I've got them all over the show, and I've written down, but I just don't have it in front of me. I'll be back there. Let's just go back to the crude oil. Let's go to the USO, because most people can type in USO. They don't know the symbols for the continuous contract, or they don't get it in their program. So let's just stick with that. The USO made a peak F right there on the 3rd of January at 12, round number 12. Pull back to the just above 1106. Was the up 1106 on the 17th, and now it's in just a sideways move. And that monthly chart has the pattern that looks like a lowercase h that goes to a lowercase m. Basil Chapman, Dow's up 51, S&P's up 578. We'll be right back after these important messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So I just wanted to show this. Actually, I put in a down arrow. I didn't have the evidence to put in the down arrow there. I was in a bit of a rush here because of the show. I should really, until I get confirmation that the MACD is turning down, I can't put in a down arrow. This could still go a little higher because the MACD fast moving average is acting well, but I am saying caution right here on the 2-minute chart of the E-mini at 2266.50. If it takes that 2265, and then I don't think it's going to, but if it does take it out in the next 2 10-minute blocks, in the next 4 2-minute blocks, that's what I meant. I meant to get to close to 10 minutes. That's going to be a negative. But if it just holds here, what we've got is the same rotational aspect that we've seen. Well, you know, the autos come down, then they go up, and then there's a kind of a lawsuit, and then Chrysler, Fiat Chrysler comes crashing down, and then it has a big rally up. And that's exactly what we're seeing, a high-level consolidation. Could it be distribution or reorientation for fund managers for a breakout into the 20,000s? I think we're going to know very, very soon. At this particular point, I think it's still a rotational correction going on. I don't yet see the signs of a breakout. We'll see. Days young. Now, let's just do this. So the question was, of course, I've already skipped. The question was, USO. USO, I think, is just in a trading band, and the trading band is between the 1180s and the 11 to 1070s, and it could just chop around there. And that H pattern, I should have drawn it in while we were on the break. This H pattern that goes to a lowercase m pattern, that could just go on for a while until there's a real breakout, until USO is trading in the 1430s, really to just cleanly take out every kind of resistance. I think it's just stuck. All right, I hope I answered that question. The next question was Verizon. So Verizon is down 4.3% today, down 230 at 50.11. Made a peak D top on the 5th of December at 54.83. Peak A in the weekly chart. It's something's going on. I'm not sure what it is. All I can say is that at this particular point, you've got to be real careful because the upside resistance in the 52 to the 53s is now very strong. Although if it does get back to 53, I would be very impressed and say, hey, now you've got yourself a well-established trading band between 50, say 49.50 to 50 itself. On the downside to 53 to 53 and 3/4 on the upside. But at this particular morning, VX earnings this morning was a VX. Let me just see if there's any news. If there is news, we've got to take that into consideration. Verizon, mid-morning update, market 25 stocks, Verizon. Mrs. Street View, shares fall. Oh, okay, so that was an earnings disappointment. Whew, that is a big disappointment. Right, telephone's the one that we're looking at, and we might be buying it. I just don't know yet. And we got a bid in, but lower down. If the one goes, the other might go. I think that at some point I've been saying there's going to be tremendous competition, and the prices. I just keep looking at my bills. They keep changing things and doing things, and I don't know what the heck's going on. All I know is that my between my telephones and cell phones and the internet, it's a lot of dough going out the door there, just for data. Okay, so in the meantime, telephones acting the better. Remember, I said the same thing about CVX, acting way better than XOM, ExxonMobil. That's Chevron better than, and that's the same thing here. AT&T is a better, I think, as an income distributor, as some kind of an income stock that you look at for a certain. You don't have to have no volatility, but you want to know the volatility range. And the volatility range, I think, in CVX and in AT&T for income, I think is much less than with Exxon and Verizon. Okay, good. Now, so that was XLP. Yeah, this is acting quite nicely now, but it's still come off the top, and I still only have a peak C in the monthly. I can't. There's just no. I don't know how to count it any other way. So that's the way unless I counted it. No, I can't. I really can't. I'm not going to fuss over the counting. I'm just saying, monthly is unusual. The weekly gave a perfect peak F top in XLP, which is the S&P Consumer Staples Spider Fund. Yeah, it's good that it's rallying, and I like this little rally. And I think that this is that H pattern that didn't come down at all. So now it's got more like the V-shaped pattern, and this might be what we're looking at. And this might be very important. Remember, XLP is the one that is not even close to. This is consumer staples, but if you go to this and then you look at the RTH, which is the retail index itself, the Van Eck Vectors retail ETF, that is struggling quite a bit. So I am impressed with the selection within the XLP, and I'm about to sneeze. So look at this chart, right? Excuse me. Look at this chart right here. It shows a large H pattern right there, coming down, holding okay, but still not going anywhere. And all I can say is that, thank you for the bless yous. All I can say is that the RTH with Walmart, Home Depot, Amazon, CVS, Lowe's, Costco, McKesson, Target, TJX, etc., goes on and on and on. It's got a bit of a problem. It's got AZO. And if you know AZO, where's AZO? Right there. AZO. AZO is tanking. After making a peak E way at the top, AutoZone, car, truck parts up at 819.54. We've been looking at these, been waiting patiently. AAP's American Auto Parts, I believe AAP right there. Yep, American Auto Parts. And it is holding a little better than the others, but it's made a peak C1, C2 in the weekly, but it made a peak F way back in November of 2015. Up in the 200 area, exactly at 201.24, and it's gone down to the 130s, and now it's at 168. It's holding better than the others. Orly is the one that we have, and Orly has gone from the high of 286.57 down to yesterday's low of 263. That's a 20-point decline. It's about 18%. That is big. That's a big problem. They said that it's mostly because they think Amazon's going to really take away from their sales in the auto parts area. I think it's really brand new cars, 17 million new cars. I think that's really more the issue than anything else, but it doesn't help. Oh, 125, that's tomorrow earnings. Maybe it'll pop up on earnings. We'll see. But at this particular point, the outlook has to be a little bit, they got to be skeptical about the outlook. So that's that. That was Verizon. Oh, Johnson & Johnson, good question. J&J. Oh, man, this is not good. There's some of the stocks in the defensive, not defense, but defensive sector are just having a terrible time. Johnson & Johnson is one of them. Bob asked about M&M. Oh, Triple M. Triple M, we were long, and we just yesterday, it was a peak C1, C2, C3, and I thought, earnings, this chart, all it needs to do is to break by 2 points on the upside, and this is going to be really good. But I got out real quickly yesterday. We got out with, I can't remember what it was, like a 60 or 70 cents loss on $178 stock and a 1 point on the little remainder that we had left. And now we're out. I'm just looking at it. This is a problem. This is a problem for the Dow as well. We'll be back. Basil Chapman. Dow's at 54. S&P's up 581. We'll be back straight after these messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So I had a couple of I want to go back to some of the questions I had a moment ago, but in the den, very good question speaking of gold stocks, Basil, would you add to a position in NGD or MUX? So this is the situation. I've had a number of these questions from subscribers because we do have a gold miner. It's done extremely well. The GDX. We also have gold stock, which has done very nice on a percentage basis. But here's the issue. The way the dollar's acted now tells me that we're in some kind of a deeper correction just at this particular point. The way gold has acted, it seems to me that it's not picked up with the dollar. What it is more, I think, an assessment that there's an inflationary projection by the Fed. And if there's inflation out there, gold very often participates well in any kind of inflationary action within the sectors of the market. And rates at this particular point suggest that there's a high level consolidation and that we are looking at a situation where rates could go down a little bit, but basically until other data comes out, rates are going to stay in this higher range. All right, I don't want to go to the yield chart right at this moment because that's not part of the discussion. What I wanted to say is, as a result, I think if you aren't in a gold stock, then yes, they've had incredible, going from $3 to $4, $4.25. That is a whopping gain. That's over 33%. But that's not the point. The point is looking at the weekly and the monthly charts of many of these. This is New Gold Inc. trading at 429, down 2 cents NGD. It speaks to the issue of a trend change, and a larger trend change in the monthly chart hasn't really been negated yet because gold didn't take out the most important low back in January of last year, December of the year before. So that speaks to this issue of inflation. So my recommendation was, in stocks that maybe you've missed, start a position now. Say this isn't really the position, it's a position. And then put in your real position for still not a full position, but another part of it to add, lower down, 3 to 7% lower down, and you want to put it in. Okay? And that's for if you're looking at weekly and monthly charts, because so far gold looks like it's going to participate in 2017 for a good part of the year and participate in market rallies, commodity rallies, let's just say. Okay? And that's going to put pressure on the dollar. But if I start to see the dollar breaking to the 102.75, 103.10 area, all bets are off. I don't know about gold. Gold might still hold well as an independent thing, but all bets are off for the dollar breaking down because it's holding this very long-term trend line support, this diagonal Chapman wave target line. Okay? So all I'm saying is, if and when the dollar starts to trade in the 99, 98 area, that's a different picture. That says weakness in the weekly chart, and it's going to impact it for time. Maybe not that much more in price, I don't know yet, but time. And that would go to the EUR-USD, and it says if the euro, which is in leg E to the upside, MACD is strong, stochastic at 91%. I love that. That's really good. And that's saying that, incidentally, Thursday night, there's going to be a webinar. And that webinar is going to be by Tom O'Brien, an expert in gold stocks. He just knows them backwards and forwards, but he's really going to be talking about the triple long, triple short gold, the dust. When you look at these instruments, you're looking at very quick moving instruments. How do you use them? How do you trade them? What are they about? What's the percentage? What's the influence? Which stocks influence? It's going to be a fabulous, fabulous workshop. Unfortunately, I have to be out on Thursday night. I'll have to listen to the webinar, but to the archive, but it should be fabulous. So please do yourself a favor. Tune in Thursday night, free webinar by Tom O'Brien. What more could you want? Okay, let's get back to our story here. So the EUR-USD acting well. Weekly chart is improved. Not as good as the weekly chart of gold, and the monthly chart had that the H pattern. They go case H that goes to a lowercase m. It broke the left side low, and within one bar has come back and closed nicely above that. That is really important. It says it can rally to the next trend line resistance or moving average, in this case 1.0885, would be the next upside resistance. And if that's taken out, it can go all the way to this high here. If the dollar breaks into the 98s, euro dollar could go to 1.087. Right there, that candle of November of last year. All right. So now, what we're looking for, USD and the USD JPY, that's the yen, dollar yen, and that's doing the opposite. It's trying to find some support. It has gone to a trough F. It's trying to find some support here, but again, same thing in the weekly chart. Peak C1, C2. That's like a double top in the Chapman wave methodology. Pulling back. It's under the 9-period moving average. If the dollar Japanese yen currency pair cannot close above 116.30 in the next 2 to 3 weeks, but instead starts to trade under 112, that's a problem, and combined with the dollar. So we're watching this real closely. Someone asked me about the VIX. Let's just go to that, VIX.X. The VIX right now is down at 11.46, down 31 cents. The pattern that we've seen is that rallies are being quite sharp, but it keeps coming back into the 11s. If on Friday the VIX index closes below 1130, that's going to maintain all the way into the end of January. It should maintain support for the Dow, and the Dow at some point should really test 20,000. I mean, really, come on, okay? But if the VIX suddenly has a rally by the end of the day, because I had said in my Chapman Wave trend gauge that there should be a rally of between 9 to 11 points in the E-minis. There's way more than that now. And that should translate into helping the Dow and the S&P. And if that's the case, I think there'll be a rally, but some weakness towards the end of the day. That's been my thinking. That's what I said for my opening call newsletter. Now, what's really important about this is that on the day, if the VIX index suddenly starts to rally, because it's not rallying and it didn't do very much early this morning when the market was down, I'm not looking at this as if fund managers are already buying the VIX index because they are nervous. They don't seem to be nervous here. It seems to me more people are upset about missing. They're trying to get in. So most importantly, what I'm looking at is that the volatility index is going to be really important. And if the VIX at any point in the next 2 days starts to trade into the 12, 20 or higher area, then this market's going to have a bit of a pullback. And then we've got the pattern that I'm looking at right here in the Dow 120-minute chart that says another arch failure, and we start to come down. A close in the 18,000, anywhere around 18,880s today. It's another 30 points higher. And I have to say, woo, maybe this is the week that we get to 20,000. I don't know. I'm just doing one thing at a time for subscribers. We're going for individual stocks and whatever it is that we think is very important right here. Okay, next question was Baba. Hey, Baba. We've got Alibaba at 100.30 up $1.91. Leg D gaps up. A gap that fails, a gap to leg D on a Friday, D or E or F on a Friday is always something I get very nervous. This is a Tuesday. So the MACD is good, stochastic 85%. I think this is good news on Alibaba. It isn't holding from the high. It's at the low of the gap opening. But the gap itself is huge from yesterday to today. I'll talk a little bit more about it. And the next question was copper and CRB. Oh, I haven't looked at the CRB for a while. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we have such a great crew here in the den. I mean, someone mentioned URA, and URA, they mentioned it recently, and I said, wow, a rocket. I even typed in, wow. It had gone up there, and then it had a whole week of digesting from the 17s down to the 15s, and today it's at 17.80 in leg C in the daily, leg D in the weekly. Unbelievable rocket ship to the upside. This is uranium, something or other. Globex Uranium ETF. Whoa, very impressive. All right, nice. Now, the question I had before was Alibaba Group trading at 100.13 up $1.72. So look, it gaps up, and now it's given back quite a chunk of that. It's still up $1.73. My rule of thumb is, let's go to a 120-minute chart, and I'll show you what my rule of thumb is. To immediately, look, it's gone A, B, C, and this is leg D in the 120-minute chart. No, it's A, A minus A, B, C, D. And now what I do, if it holds the gap, if it holds the opening price and doesn't break below into the gap, then I automatically draw a rectangle like this, right there. But if it breaks under it, I do the rectangle, but I'm also being prepared to watch the stochastic. If the stochastic pops, this is a 120-minute chart, over 80% and then goes under 80%, I'm ready to look at it and say, okay, baby. Baba, sorry, not baby. There's the other pattern, and that's the Eiffel Tower. So would I be buying Baba right now? Absolutely not. Would I be shorting it? My bias is to say if it bounces a little higher, my bias would be to say, yeah, it's probably going to be a short. I do absolutely nothing now, although my bias is to short, but risk reward. Well, I suppose risk reward at 100.2, you could put a 2-point stop, a 2% stop on a small position, and just treat and have it as a trading stop, because it shouldn't be giving back this much after such a big move to the upside. So that's my answer to that one. Okay, so Baba, I'd say, I'm not sure if you're in it. What the question was, it's just what leg up? Yeah, what leg up is a leg D. MACD is good. Stochastics at 85%. That's one of the reasons why I probably would say it's probably going to pull back and then just digest the gains, have another pop up, but it might not make today's high of 103.19. And if it doesn't make it simple, if Alibaba does not break to a new high, higher than today's high, over the next 3 to 5 sessions, but instead goes into the 99.50 area, just 3/4 of a point from here, is probably going to test the gap up high from yesterday, 98.67. All right. But so far, good news and all that. But the weekly chart really has to hold these gains because otherwise it's going to start to fail. Monthly chart says it should go to C at some point. Maybe this is the impetus to say a little bit overbought, going to pull back and make a sideways move between 98 and 95. And at some point in February, mid-February, it might be a buy again. But that's just the way I'd look at it right now. Okay, that was that. Next question was IBM. Whoa, up 380. Oh, that's why the Dow strongest Triple M was very weak. So IBM at 174.86, up 383. This is like a brand new move. A, B, that's a C, I think. 69.87, 69.92. So here we go. So that was a peak. G, right there, I believe. Yep. And this is going to be a brand new move to the upside. Didn't take it out. So here we go. A, B, C, and there's your D. So D, a lot of this says that we're getting somewhat overbought in the shorter term. So I'm watching it closely. Yeah, IBM is acting very well, getting a little bit overbought, and I put the support level between 169, 172, and 167. That is the area that I'd watch real closely. So far, it's very important in my work that because GE is failing, they're having a nice move up 26 cents today, but it's really saying market is a little toppy based on the GM action. Triple M pulling back sharply. I mean, when 2 out of 4, UTX. UTX is up 67, not a big deal. It's good, but it's not a big deal. It should be up. It should be at 111.50 to 111.75. Then I say nice action. So far, this is just okay action. Yeah, just keep it in mind that I like my Dow Quartet to be all in sync, and right now they're out of sync with the market. They're saying the consolidation should continue a little while longer. Okay, got that out the way. Next question was high-grade copper. I saw this recently. No, a while back. I said, copper's, I think it's pulled back. And then I said, you know what? I think copper's acting well. We missed our copper stock. I wanted it at 0.45, and it went to 0.46, I think, and we missed it. And I should have just dived right in. After all, that's what you want. Well, it's going to be a leg D in copper if copper takes out 2.7160, just 0.0001 higher, starts leg D, and that really makes the 200-period moving average both a magnet on the way up and the way down. In other words, every time it pulls back, it's going to come back to the 200-period moving average for the next little while. Every time it moves up, it's going to be coming back to test the support, but it looks like it's getting ready on the monthly to start a move into the 2.80s. If that's the case, that's a really big positive for the market. And the next question was FCX and Vail, I believe the two questions I had. Yes. So FCX broke out. It's in leg. Ooh, nice move. Leg C in the daily. Oh, the commodities. And then in the weekly chart, this is going to be leg C. Vail, FCX is Freeport McMoran acting very, very well. And Vail, leg D. It's a little bit more extended. Leg E has gone right through the 200-period moving average, meaning that the 200-period moving average at 954 should be outstanding support if it pulls back. Hey, they're all acting well. The next question was CCI. TRCCI. Just had to remember the symbol name. I always like to do that. So this is the what happened here? So that went to a peak C, pulls back. So that's a D. That's an E and that's an F. I have to do that because it continued. Yes. So this is the Reuters equal weight. This is the full name to give it. It's the Thomson Reuters. Thomson Reuters continuous commodity index monthly with Chapman wave notation. Hasn't made a leg B yet, but it's very close. It has to get to 438.23. It's in leg gray B in the weekly chart. Acting very nicely, having made there's that falling axe formation. Falling axes very often can reverse and then turn into a very positive cup formation, and that's what it's doing. And it's say within 2 weeks, there should be a test of 438.22. Acting well. That was the question, yes. Another question, ZBIO. Wait, I looked at that recently. ZBIO. ProShares Ultra Short NQ. Ooh, wait a minute. NQ? Let me just read what it is. ProShares Ultra Short NQ Biotech. Oh, the biotechs. Okay. ZBIO trading in legs. See on the upside. Yeah, I think the biotechs are going to feel the pain because I think President Trump is very outspoken and he's made it very clear that he thinks these prices are exorbitant. I'm not sure just how he's going to go about repairing it. But yes, you're in the right position. Congratulations. ZBIO at 22.84, up 77 cents. I'll look at it in a moment. I'll look at the IBB. We'll be back straight after this break. Basil Chapman, Tiger Conditions Hour. Dow's up 60. S&P's up 7.18.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, everyone, we're back. This is the 2-minute E-mini chart. Remember, I said I wasn't going to cancel that down arrow because it held the 9-period moving average. Look at that blue line, that 9-period moving average. It's made a peak E. I could call that a B, E/B, but for now I'm just calling it a B because the MACD's turned down. Stochastics at 70%. Watch this closely. The parameters will be 269, starts to break it out. 269.50 on the E-mini breaks upside, and 266.50 says to 2267 to 2266.50 is what you got to watch If it takes that out, you got yourself a little bit of a lunchtime hiatus, right? And then look at that resistance right there, 226.880. This doesn't know about quarter point increments. It just gives you the parameters. Okay, let's get back to our story. And what we wanted to look at was the IBB. This is the uppercase letter A, Eiffel Tower, straight up, straight down thesis. And it's got that H pattern that goes to an M pattern, and a continuous H pattern just keeps unfolding. I think the biotechs is the one area that's just really going to have a tough time, besides overspending and doing a number of the wrong things. The biotechs are going to be under pressure, political pressure. So yes, it's down 268.05, down 280 right now. Doesn't look very good. And the resistance is 273, the 9-period moving average. Okay, so for the rest of the day, let's just make it real easy. I should be back later on with Tom, I believe. The VIX is at 11.44. Let's just go through this again. Going under the 1130 area will start to really give extra pressure to the Dow, and then you can start to see the Dow and the S&P move in sync with the S&P up about 10 points, the Dow up about 85, almost 90 points. That's going to be very important. What I am looking at here is if there's a reversal later in the day, I'm not sure what can do it, but if there is a reversal later in the day, you want to see the semiconductor index start to turn around. It's in an area of resistance. It could go to 74.26 for leg D in the daily, but there's that double topish pattern. I'm watching it real closely. I think that the SMEs are going to be the clue. Texas Instruments comes out after the close. They've acted extraordinarily well. Is this going to be sell the news or buy the news? That's really going to be the key, because if the SMHs break into the 75.80, 76.30 area, that's just another ball game. I think it's then going to drag the market up. So we're going to watch the semis very closely, and the QQQs need to make leg D, and they have to go above 123.65. They don't have to, but I think that's what they need to do. And at 123.66 stars leg D in the resistance zone that has hit so many times and been repelled. That's all I need to say as far as the action is concerned. A couple of things that are very important at this particular time. You know, we're all about education here. Don't forget Tom O'Brien's free webinar tomorrow on Thursday night on looking at those 300% long and short gold ETNs. The dust. Why am I forgetting what the other side is? Dust and somebody tell me it's dust and well, the inverse. That dust is the short side. Nugget, of course, it's nugget on the upside. So they're going to be a fabulous webinar. Looking forward to it. Now, within the context of the market, let me just show you what I'm looking at here in terms of this pattern. You remember I spoke about it a while back. I said that this looks like a racehorse. There's the little legs in the front. This is the pattern that I've been following, and so far it seems to have worked quite well. How it acts right here in the nose of the racehorse, there's the tail, there's the back legs, there's the front legs, there's the neck and the head. Look, now it's above the 9-period moving average and the red 20 exponential moving average. If the Dow is going to break down, it's going to have to break under 19,650. At that point, on the short term, we've got a sell mode. At this particular point, chop, we're on a sell signal, but we haven't broken out. 20,000 breaks it out. That's going to be important. Hey, sideways action's been for a month and a half. I'll be back later. See you all. Otherwise, tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.